Calling this video after close of trade Thursday, 17th January 2013. Well, it's worth doing a video at the end of the day because it's quite an important day. We had kind of an exhaustion blow-off day, and we got into the 80s, just squeaked into the 80s, closed at 76.50, about 1.4 million contracts traded. It doesn't look like very much. It's even below the average kind of volume, but it was an exhaustion up bar today, and quite a lot of more volume than we had in the last week and a half or so. So that's what's given us this signal kind of up here, and I think it's kind of going to look a little bit like one of these kind of patterns here. I think we might kind of just play around at the highs tomorrow, but then start to sell off on Monday. And here's why. So better X trends kind of trailed the stop up. We got this kind of sitting at 50 for a change in trend, but I think we're going to be testing around here. What was quite interesting, a couple of things interesting on the trend values today. So first of all, the better trend or the adjusted trend value is actually 0. Now, better trend takes the normal trend values, kind of flips them up and down, takes a log of them and so on. And so basically what you have is a positive number is buying and a negative number is selling. We had a value of 0 today. Even though the market was up, we kind of closed pretty high. There was, obviously kind of a lot of buying kind of going on, taking us these new highs. But within that, there was weakness. The amount of selling kind of came in to match that buying, and the adjusted trend value was 0. So that's important. Plus, the trend oscillators turned down today. We've got a sell signal. These tend to be a little bit early, so we could just play around at these highs tomorrow. But look out for Friday into Monday, Tuesday kind of activity. And what I think is important, I talked about this the other day, is that we've got a bearish pattern kind of going on here with the trend oscillator. So we had higher highs being made in price, lower highs being made on the trend oscillator, so that shows kind of inherent weakness in the market. We couldn't kind of push the trend values kind of higher at this stage. So just look out at these elevated levels. The other thing I'm going to show you is the average trade size was very high today, and we've seen this kind of before on little spikes up. Tend to get kind of low average trade size here on little dips, but we tend to get high average trade size on these little kind of localized highs and so on. So the value was pretty high today. This isn't Better Pro-Am, by the way, just in terms of coloring. This is another algorithm I use to measure average trade size, but the coloring is the same as Pro-Am. So that's professional activity going on here, kind of taking profits at those highs today. And then just this is kind of going back to the bond oscillator, which I haven't talked about or referenced in a long time, but it's just kind of prescient at the moment because we've got weakness in bonds, or have had weakness in bonds over the last couple of months, and strength in equities. And what's going on here? So since the run up in the equities that we've had here since beginning of December, really November, December, has been matched by a drop off in the bonds. So this is, remember, the TradeStation has a little bit of problem matching up different symbols from different time zones and different exchanges. So the way you do that is you use the exchange traded funds that are representative of the equities market and the bond market. So that's the SPY and TLT that I use on this, and we calculate an oscillator based on the ratio of these two values. So we can see we've had a run up in equities while the bonds have been kind of selling off, and we're just reaching a point where the oscillator is starting to kind of turn down. And that's showing that we could have reached a little bit of a local bottom in bonds, and we could have a little bit of strength in bonds as we weaken into equities. So just to show that, that's what's kind of been driving this run up in equities over the last couple of months. In terms of long-term tip bar charts, 40,500 tip bar chart, there's that blue professional bars hitting those highs, bang, into that 80 kind of level here. We just overshot the resistance point by a little bit. This hasn't on better momentum signaled yet, but I have a feeling that's going to signal a flush pattern tomorrow once we get a couple of bars behind us to get confirmation on that. So we've had our exhaustion buy and bearish divergence and then go for a flush pattern, and this time we've got kind of professional selling kind of up here at the highs. If we go to 13,500 tip bar chart, you can see the same thing. We had, as we broke to those new highs today through 70 basically here, we had a bit of a rush of buying, and then next time around when we came up through 80, today you can see exhaustion buying. The blue professional bars kind of came in. We have bearish divergence kind of come in here. On the 4,500 tip bar chart, we've got pullback in an uptrend gone off at the end of today, and so we could easily have a little pullback to dirty end of trend, something like that, tomorrow, Friday. And that would be kind of interesting on that time frame. So kind of wait and see in terms of Friday's activity. I think it's going to be fairly small range-ish, not kind of big trends to be had, but just kind of topping out. And Fridays tend to be, well, they tend to have a trending days, and they tend to be up days. So I suppose it's possible that we have another trending day in a row, but because that professional activity was kind of selling those highs, kind of wait and see. But I think Friday into Monday is going to be more important. In terms of intraday charts today, well, the thing to do is kind of get because the overnight session was so strong. We kind of spiked after the close, and then just running into the open, we had a real rally kind of going on. So any kind of sell-off in the morning was worth buying. I was in at long 71.25, and then when we had all of this activity, this weakness kind of going in here, actually I got out. The first one was only out at 73 for 1 3/4 points, but then I re-entered again long at 73. And I'm trying to remember where I did that. I think it was here, after this exhaustion selling bullish divergence kind of comes in. Remember that to end these moves, we need to see exhaustion buying during the day. This was a high reading, admittedly, on better momentum before the open, but it was an exhaustion pattern. We didn't see the exhaustion patterns till after kind of 10 in the morning, and this was the rush to sell. A little bit too early, bullish divergence kind of comes in, bang, and then we have the exhaustion patterns right here at the highs, and the highs are being made with Rambo patterns up here, and then we've broken into a downtrend on 1500. So so for me, 3 points after those two trades, and then stupidly I went long at this Rambo pattern here. I mean, the market had topped out, and we'd had was almost a flush pattern, and Rambo patterns up here. We were starting to sell off, and I thought, oh, maybe we're going to close on the highs, and we had triple Rambo pattern here into this support. And then as soon as the blue professional bars kind of came in, we dropped through the lows of that. So I got out with a half-point loss there. I was just trying to be greedy and try and make an extra point into the close and get my 4. Yesterday was a one-shot, one-kill. Just going back to the open on yesterday. So we had pullback to end of trend, and then a little bit of weakness here. I got long at this the break of that blue professional bar after yesterday, and pulled out 4 on the way up here. There was better entry with the support level when it kind of came in, but this pullback to end of trend sequence was matched. We had cyclical support on the 4500. We had good signals on the 500 tip bar chart to show that was a low, and we were kind of racing away. So there we go. So that was kind of today's activity, kind of a little bit of blow-off activity into the 80s. And I think Tom DeMark doesn't come out into the public very often. He's kind of the technician's technician, if you like, and I like his stuff. I've over the years kind of followed sequential and some of his combo type things, and I like them. I think the choice of, I think it's 13 is kind of the key number on sequential. I always think is a little bit arbitrary, so that's why I don't kind of chart it or plot it. But he has come out over the last couple of days saying that a close of the S&P above 70 would give him a sequential kind of sell signal, and so I think that's kind of quite interesting. He's also said that the bottom's in for Apple for the time being, and that we're going to see some strength in Apple over the next couple of months, back up 20% or so. Interesting. We'll see where that goes. So anyway, just a little bit. If you want to do a search on Tom DeMark and just see what he's been saying over the last couple of days, I like him. He's always got interesting things to say, and he is, like I say, he doesn't look at. I don't think he looks at fundamentals at all. He is a technician's technician, so interesting stuff. Anyway, so this video is kind of out late. You'll get it on Friday morning or whatever, but just today's activity was pretty important because that average trade size was high, and it was a little bit of a blow-off day. Quite a lot of selling. Hope you traded well.